The game of ISAs has a new player. InvestEngine, a new low-fee trading platform, is turning heads, grabbing attention, and challenging the old guards of the low-cost investing world. So just who are InvestEngine? What do they do? What makes them special? And why should you care? Let's find out. Welcome to Zenvesting. So why are we here? Well, many of us are just starting out on our investment journey, and there's a bewildering array of platforms out there, from the old guards like AJ Bell to the new low-cost, no-frills platforms. But now there's a new player in town, InvestEngine, who might just tick most of the boxes for anyone just starting out on their ISA journey. Okay, this is not financial advice. I am not a financial advisor. I'm not qualified to give financial advice. If you need expert help, please seek expert guidance. Okay, so some background. So let's set some context. Where exactly did these low-cost, no-frills platforms come from? What made them different? And why were they important? So as you're probably aware, investing back in the day was moderately difficult and fairly expensive. Even now on my preferred platform, Interactive Investor, it costs £7.99 for an individual trade. Now that's fine if you're buying $10,000 on Amazon stock, but when you're investing in 4 or 5 companies with about £100 to play with, well, clearly those fees kind of stack up and quickly eat into any profits. But this was the lay of the land for many years, and then 2 new platforms appeared, Trading 212 and Freetrade, and they shook up the market. So firstly, with Trading 212 landing in 2017, followed by Freetrade in 2018. Both platforms offered compelling app experiences, a no-frills service, and very low cost, if not free, trading and ISAs. And so these 2 players were battling it out and essentially became the de facto platform standards for new investors. But then mysteriously, Trading 212 closed its doors in January 2021, and no one really knows why. And this basically left Freetrade standing supreme, alone in the low-cost sector. Until now, InvestEngine has come in, again with a very low cost, in fact a free trading platform and a very low cost, we'll manage it for you ISA. And it's this ISA that we'll cover today. So look, before we get into this, every investor is different. Everyone comes from different levels of experience, has different financial goals, has different amounts of money to invest, and frankly, with all the platforms, there's pros and cons to each. Often low cost means low flexibility, so there is no perfect answer. So to give this some context, we're going to actually picture a new investor coming fresh into the market, getting their first ISA with about £100 a month to invest. So what would that new investor be looking for? Well, first of all, they'd want a low barrier to entry. They want a low starting point. They wouldn't want a platform that needed £1,000 for the first investment. Similarly, they'd also need regular investing, and this is critical. Firstly, to make use of dollar cost averaging, which can smooth out volatility and lower risk, but also, frankly, because monthly investing can tie in with monthly pay packets. They will ideally have access to a wide range of stocks and shares, so they can invest in companies that interest them. But equally, being new to investing, they may also want ready-made portfolios to be managed on their behalf. Now, low fees will be especially critical because high fees, particularly high trading fees, will really hammer their options if they're trading with £100 or so a month. And of course, they will need the opportunity to diversify, to spread the risk, to not put all the eggs in one basket. Now, of course, in this sector, equally, fractional shares are particularly important for this new investor. Essentially, with £100 to play with, and with Amazon running at $3,300 a share, not many of us will be buying many of those. So with fractional shares giving the ability to actually buy a slice of a share rather than a whole share, this will be critical for our new £100 a month investor. And of course, finally, they'll want a rich but straightforward app experience. A bit of research, the ability to track performance, see how they're doing, look into stocks and what have you, will be really key to the experience for this new investor. So there you have it. Hopefully a reasonable and straightforward set of platform priorities for our new investor. So how does the InvestEngine platform stack up? Well, firstly, you can invest £100 minimum, which is a great entry point. Crucially, you can also set up regular investing for as little as £50 a month. Again, really critical for dollar cost averaging, but also, let's face it, the temptation to skip a payment because you had a heavy month is always there. So having a direct debit set up, maybe aligned with your pay packet, is a great idea. Now, in terms of the next section, there are really 2 limits in the InvestEngine platform. The first is they only do a we do it for you ISA platform. They don't have a do-it-yourself yet, although apparently it is coming soon. The second issue is regarding that do-it-yourself platform. There is a trading account, non-ISA, but that only has access to 150 funds. Now, it's a good set of funds. There's some trackers in there, gold, palladium, bonds and so on and so forth. And you will generally find a good mix, but you won't necessarily find the funds that you're after. This can be a good or bad thing. Often people can find a lot of choice overwhelming. There's actually studies saying that the more options a pension investor is given, the less he's actually inclined to invest. So it can be a good thing having a smaller choice. But look, most of the other platforms have much bigger choices, so it's worth pointing out. Especially as you can't actually invest in individual stocks or perhaps investment trusts. Now, cost-wise, however, it comes in very well. The managed ISA is 0.25%, which actually is very competitive in this market. In terms of diversity, let's come back to that We Do It For You ISA. So how does this work? Well, basically you answer a set of questions concerning your attitude to risk, your financial position, your financial goals, when you want the money back, and based on those questions, it will build a portfolio for you. Now, it has to be said, this is quite a rich mix, as you can see here. There's a wide spread of asset classes. Bonds are in there as well, a bit of gold and commodities. And actually, this is, to be fair, probably a richer portfolio than most average investors will put together. So from that point of view, it is definitely very diverse. Now, of course, the one problem is you can't track the historical performance of this kind of portfolio because it's custom. App-wise, well, it's smooth, reasonable, quite slick, and I do like the feature that lets you set your investments by percentage rather than by cash. As you can see here, I took my £150, put it into 2 stocks, 50-50, and I haven't got to worry about how much cash to allocate to each one, and whether I put in £100 or £1,000, the platform will actually divvy up my contribution appropriately. And I do like that. It's a feature missing from my main platform, Interactive Investor. Having said that, it doesn't give you much in the way of research. There's a very basic chart, some fund information, access to key documents, and that's about it. So I'm going to give this a qualified fail, but with bonus points for trying. Okay, before I wrap up, I have to cover the particularly generous offer that's in place right now. So as you may know, often these platforms give some kind of incentive to get you on board. For example, there's a link in the description to Freetrade. Sign up with this link and you and I will both get a free share. Now, unfortunately, I can't give you a referral to InvestEngine because only 5 referrals are allowed, but it is quite a compelling offer. Basically, this is how it works. If you sign up before the 28th of August, you get a £50 bonus when you invest £100. Then you find a friend, refer that friend, and both of you get an extra £25 into your account. Do this 4 more times and you repeat the process. You get £25, they get £25. Put it all together with 5 referrals. Between you, you've then got £550 of free cash for a £600 investment. That works out at £175 for you for your £100 and £75 for your friends for their £100. And of course, your friends can refer 5 times as well, so you can keep it going. If you can get the referrals, both of you get the cash, and the only limitation is you can only do 5 referrals. But as you can see here, I have my £100, my £50 sign-on bonus. Unfortunately, I couldn't get a referral, and I've got it broken up 50-50, and I'm just going to leave it. Basically, I've got my ISA for this year. However, I do have in mind a particular challenge. I'm going to set up a Freetrade ISA for my partner, and an InvestEngine ISA for my daughter, a We Do It For You, and then I'm going to track each one, invest into each equally, and we're going to see where they go. We'll have a regular update and a wrap up at the end of the tax year to see who's the winner. It's going to be very exciting. So that's it. If you're looking to kick off an ISA, you're new to the market, and you quite fancy the idea of a We'll Do It For You portfolio, and you always like the idea of the free cash, why not give InvestEngine a go? If you want the alternative, I've got Freetrade below in a link. Sign up with that link, and you and I both get a free share, as I said. Now, in a follow-up video, I'm going to pick out 3 platforms: Interactive Investor, InvestEngine and Freetrade, put them all together against these criteria that I showed before and see how they match up for a new investor. And that's all for now. Have a great week.